Welcome to an ARMR Report live in-game update. I'm recording this for ARMR Insiders for immediate release, and I'm going to share this with YouTube probably later tonight. So allow me to just remind all of you, this is the ARMR Report. It stands for Algorithmic Risk Management Research. I'm your host, Brett Rosenthal. This is a show about quantamental investing. What we do is we take quantitative analysis, which means algorithms, right? We use computer algorithms to help us add and subtract capital. We combine that with a fundamental foundation. That's the information edge I share with you every time I come on this channel. This particular video I'm putting together is an education video. I just spent the last hour going over all of my stops, making sure I had them set up correctly. And I thought I would just share with you my process so that you can see, kind of how I go about it. And of course, you all should create your own process, but perhaps you can use this video as a leaping off point. So without further ado, let's just run into a couple of names. This is a TradeStation platform I've got up and running. I use different platforms. This is the one I'm looking at right now. And what I like to do with my stops, over here on the left-hand side of the screen, I have a radar screen set up with all of the stocks that I've got in the portfolio I want to have stops on. And what I simply do is I go to the last price, double click on it, open it up, put in a price, a low price, with an alarm. So when it hits that price, the alarm goes off. I use a continuous alarm, so it absolutely drives me crazy. Okay? I don't want it to happen once and maybe I'm just stepped out to grab a coffee and I miss it or whatever. I want it to absolutely drive me crazy, to force me to look at it so I can make a decision. Do I have to hit the sell button immediately? Do I put a stop in at a lower price? Do I watch it for later in the day? So that's the first step. So I literally went through every stock that we own, looked at the chart, which you're looking at right here. This is Apple, right? We bought this today, okay, right here. We bought this before it broke out above 120. If you're following me on Twitter, which is at Brett Rosenthal, you would have known that because I tweeted it out even before it broke out that we were looking for that trade. So we're going to hold that overnight. Looks like the stock, I've been saying for a while now, there's no way the NASDAQ 100, well, let me start over. There's no way the market rips to the end of the year making new highs without the NASDAQ 100. And there's no way the NASDAQ 100 does that without Apple. So it's kind of a no-brainer to put the trade on. It's tight to the stop. The stop we're using on new positions, we have three stops we like to use. One is I like to call the low of the day I bought it, right? So if you're buying it right and the asset is tight to its location, then you can use the low of the day you bought it, or LODB as your stop. Okay, so literally you look at the price, what's the low? That's your stop, which in this case is 116.81. You go over here, you double click on it. I'm not going to do it for you. You can do it yourself and put in your alarm. Please note, I never put stops into the market. I don't want someone to see my stop out there, okay? But it's okay if you're an individual and you only have a small amount of shares. It's not really going to change the market at all. You can put your stops in, okay? But I just tend to like to see how it trades once it hits the stop. All right, so the alarm goes off. I look at it to see how it's trading, and if I need to sell it, I sell it. Sometimes it'll be a quick knife down reversal back up, and I'll hold on to it. And I'll set the alarm again. If it hits again the second time, I'm gone immediately, okay? And I do that just to avoid stop hunts that sometimes happen. All right, so in this particular case, there's three stops we use when we first get started, right? Low of the day we bought, low of the move we're buying. And in this case, I would consider the move that we're buying, and I'll just increase the screen. In fact, let me open this up for you. All right, to me, the move that we're buying is this first up bar. That blue bar right there started the move, right? It's up 4 days in a row. Blue, 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 blue. All right, so the low of the move we're buying, LOMB, is the same, is right here, that low right here. So you could use that as your stop. And then I like to say low of the structure that I'm buying. And in this case, the low of the move and the low of the structure are the same thing for me on Apple. But sometimes, you could argue down here is the low of the structure and you could take it out if it goes down there. But to me, that stop is too big. And so to me, the structure is a little bit better. I think if I was to explain structure, it would be this, right? Here is the uptrend you're looking at. That's the structure in my mind. So if it goes below the uptrend, I'm out. Low of the structure. All right? Let's go through another one of our favorites. So Pinterest was never taken off of our list even after the Monday massacre back here when the market imploded. Okay? It didn't ever take Pinterest out. And the reason is the 25-day moving average, that kind of maroon line is what we're using as our stop there. It's my trailed stop. We own the stock a lot cheaper. Okay? So it has to close below the stop. That's why I wanted to show you Pinterest. It doesn't matter if it just touches the stop in the morning, closes higher, we're still in the trade. So this is another reason why I don't put orders in. What I do is I use an alarm in any trading software you might have to tell you the stop has been hit. Then you look at how it's trading and you look at the time of day. If it happens in the first half hour of trading, I don't really have an interest in selling it. Okay? If it's in the last half hour, it's gone. So the timing during the day really matters. There's a lot of reversals that happen in the first 2 hours of trading. So I try to avoid being stopped out until after 11:30, and then I'll start saying, okay, I got to let this thing go. Does that mean I lose more money on some days? Absolutely, right? So my stop gets hit and I'm selling it lower. But statistically speaking, on most days, I'll either be selling it at or higher or not selling it at all by the end of the day, as long as the market holds up. So you have to decide for yourself how you want to execute. Let's look at Canopy Growth. Just rip through them, okay? I've increased, so here's the other thing we do. We put the position on all the way down here at 1624. The stock's been going higher. What we've been doing is raising our stops, so we go through a progression. We go through the first stop we set up is the principal protection stop, okay, which are those three I mentioned. The next stop we use is a raise stop. So once the stock's gone up enough, we'll raise our stop to some level so that we avoid having gains turn into losses. That's very, very important when you're investing. Okay, no matter how much you love a stock, you don't want to have a gain turn into a loss. So at some point, you bump up that stop to break even, give or take a little. And then the third stop is a trailed stop. And you could use any of these moving averages. You can do whatever you want. This is what we do, right? We can use any of these moving averages. We can do the 200-day, which is this green line. We can use the 50-day, the 25-day, the 14-day, or the 9-day. And it really depends on the type of trader we are at that moment, whether we're a swing trader, whether we're investing long-term, the type of market we're in. It really changes from day to day. So what I'll tell you here is I'm using the 25-day on Canopy Growth because it also coincides with structure, which happens to be this pennant formation that it just broke out of. As long as it stays above the low of that formation, I'll stay with the stock. Okay? Now this right here, interestingly enough, is a standard deviation. In fact, it's 4 standard deviations above the 200-day moving average. So sometimes we'll sell a little bit at that target. 10% of the position, 20% of the position, 50% of the position, depending on the market and the type of asset. Okay? That's just something for you to think about. Each asset has a different standard deviation that we would use, but usually it's 4 standard deviations. So there might be a day here, I don't necessarily sell just because it's close to that line. If it blows through it, right, I might sell a little. If it blows through and has a reversal bar, I definitely sell some. Okay? Let's move on. Kronos. Same type of situation. We added it real cheap. The stock is running. We're going to raise it to the 25-day moving average. See, you can see the structure and the moving average is how we use. That's our trailed stop. Let's something we added recently, PayPal. Okay, added PayPal right in here. You know, there's not much to do with PayPal yet. It hasn't extended. So what we do here is just raise our stop to the 25 or the 50-day moving average now. So when we bought it on this day, you might have been using the low of the day you bought it. Okay? Now it's extended enough that you got to raise that stop to break even or maybe give or take a little bit, okay, to protect that position. Okay? Let's take a look. I'm just not going to go through every trade, but let's look at, how about IBM? All right? So we bought tight to the base here. We were adding it right here we added it, tight to the base. So in this case, it was an easy low of the day we bought stop. Please note how often the best trades do not challenge the low of the day you bought it. That's why we use that stop. It's amazing how accurate that is. It gets you out of the losers, and yet you're still in your best positions because they never challenge that stop. You might ask me then, why do you use the other two? Lower the move, lower the structure. It's a great question. You don't have to. You don't have to. Sometimes I do. I give it a little bit more room sometimes because some trades come down and test and then they move. So I give it a little bit of room. But it depends on the market and the stock. So there's IBM. So what do we do now? It's right at the 200-day moving average. And you're going to want to raise, I'm going to want to raise my stop. So instead of it being down here, the low of this bar, I'm going to step up to the 50-day moving average now. Okay, as long as the 50 keeps rising, we'll rise with it. Here's a good idea. Let's take a look at a stock that's not working. Okay, here's Mastercard. So we added Mastercard, I think it was right back here, and it popped out. Could have been on the pop out day, and it's had 3 down days in a row. All right, I don't like 3 down days in a row. Sometimes I might bang something out just because it's down 3 days in a row. But for sure, if your stop was, let's say the low of this big down bar would be my stop originally. It hit the low and then reversed. So I use the big down bar as the low as my original stop. And what I'm going to do now is raise the stop to the 50-day moving average, right? And the low of today's trading. Okay? I don't want to see today's trading be taken out. I'll take that position out immediately. All right, let's look at AMD. All right, we bought this inside of the base, so we're already making money as everybody else is scrambling to get on board. But what that allows us to do now is raise the stop to the low of today. If this is the breakout day and we're in below this day, what we don't want to see is a reversal back down that takes out the low of today. If that were to happen and it were to close down there, I'd be gone. Now, if it happened first thing in the morning, I would give it room just in case it wants to jerk us around a bit and then reverse. But if it's closing below the low of today, we're going to be out and it's not going to hurt us at all because we picked up the stock cheap, right? We picked it up before the breakout, which is the idea, what we all try to do. But we all don't always do that, right? Sometimes we pay up for it. How about IBB? So this is a nice pennant formation. Again, we bought this tight to the base. We actually bought this right here on this day. So we bought it before it popped out, and now it's moving higher. So I'm going to really, again, I'm going to raise my stop. This is another example just like AMD. I'm going to raise my stop to the day it popped out of the downtrend, which was Friday. If it goes below the low of Friday, I'll take the position out of the portfolio. At the very least, I begin thinking about taking the position out. Sometimes we cut positions in half, and then we use one of those lower stops as the place where we get out of the whole position. It just depends on the type of portfolio we're running. All right, I think that's all for right now. I just wanted to share with you my thought process on how I put stops together and how I raise stops. And why don't we just finish off, whoops. How about MSOS? Right, so we bought the stock right in here. Okay, what day is this? That's the 23rd. Oh wait, we bought on the 24th. We paid right here, okay? So what I'm doing now is using the low of this big up day as my stop. Okay? All right, so now I'm going to use the low of this big up bar as my stop and let the thing run. All right, and as it runs, we can change to one of these moving averages. So anyway, I hope that helps, guys. Just an education process on how I do it, just to give you some structure on how you might want to start focusing on your stops. But it is very important to look at your stops every day. Go through your list, set up, hang on, guys, it's live trading desk. What can I say? Talk to me, quick. Good, I got to call you back, brother. All right. So, what was I saying? Darn it. Anyway, guys, can't remember what I was saying, but I hope this has helped you guys out. And if you have any questions, don't forget to comment right down here in the comment section. Ask the question, and I could do another education video of how I go about this process. Because over time, you'll start to get the hang of how to follow. Oh, that's what I was saying to you guys. Don't forget, every day go over your stops. Go to your list, update your stops. If things change every day, you have to pay attention to how your stocks are trading. Prune that tree if you're not getting paid. Focus on the stocks that are working. All right? I'll talk to you guys on the flip side. Have a great day trading.